All right, welcome back. This is the Something Venture podcast. I'm Kent Lindstrom. I am your host. My guest today is Scott Kupor. How are you doing?
I'm doing well, Kent. How are you?
It is so good to have you. Scott is the managing partner of Andreessen Horowitz, the respected venture capital firm. And before you think to yourself, isn't a venture capital firm just two guys and a bank account? Andreessen Horowitz.
Oh, I've been promoted already. That's good. I like that.
You're pretty near the top. Andreessen Horowitz employs more than 150 people and has over $7 billion under management. That's probably a higher number. We'll talk about that in a second. Before this, he had senior roles at both Hewlett-Packard and Opsware, has obviously done a lot of other things too, but in his spare time has managed to write a book called Secrets of Sand Hill Road, Venture Capital and How to Get It. So this is great. So the news of the day, I guess, is Andreessen has just raised a multi-billion-dollar set of new funds.
That's right. Yeah, we just yesterday actually announced two new funds. So one is a continuation of the early stage activity we've done across consumer and enterprise and actually financial services. And then the second one is kind of a little bit new and a little bit of the same, which is we've always been a multi-stage firm, but we've never broken that out as a separate fund before. So for the first time, we raised a $2 billion fund that will break out the later stage investments from the early stage opportunities.
And what did you see that said $2 billion? I mean, that's an enormous amount of capital. Yeah. What are you seeing that says, $2 billion is a fair amount for us to deploy at this time in history?
Yeah, the biggest macro trend we've seen, which has really been developing over the last 10 to 15 years, is startups are just staying private a lot longer. So, right. If you look at the data, people would go public 6.5 years from founding. Today, those numbers are 10 to 12 years after founding. And what that meant for us was we said, look, it really means there's more opportunities, therefore, to invest in growth in the private markets. Right. And so you can do it in the early stage. You can do it, obviously, in seed, as we were talking about earlier before we went live. And then, there's this new opportunity where companies are still probably 3 to 5 years away from going public, but they need significant expansion capital. And so we felt it was a great opportunity for us to take advantage of that.
Did you ever imagine when you came, about 10 years ago, you joined the firm.
That's right.
And it was kind of probably three guys.
There were three of us, when we started, yeah.
You, Andreessen, and Horowitz. What was it like making the shift from being an operator to sort of the managing and shepherding other people's money and investing in entrepreneurs rather than being the alpha dog at Hewlett-Packard or at Opsware?
It was a huge learning experience in many ways because, as you said, there were literally three of us, and there was no job description. The job was, okay, we're going to start this venture capital firm, go figure out what we need to do to actually do that, whatever that is. The biggest change, I think, over time is, as you know, having been an operator, is you get kind of report cards every 90 days, right? You have these things called quarters, and you have business objectives that line up to that. And the oddest thing or the hardest thing, I think, when you kind of transition into the investing role is sometimes, nothing happens in a quarter, or sometimes, you decide that doing no investments is the right thing to do. So, kind of this idea of kind of inertia and activity that you often have in operating companies is just such a very different, motion than when you move into the venture capital world.
That struck me when I first, we raised capital from Kleiner Perkins and Benchmark, and you'd go to their office to meet with them. And Sand Hill Road is the epicenter of the greatest wealth creation machine on the planet. And it was kind of quiet, kind of peaceful. And you kind of thought, wow.
It's a little bit, it's cerebral. It's probably appropriate that we're right down the street from Stanford, right? It's a little bit more of course, cerebral institution. Yeah, I think hopefully, as you may have seen when you came in here today, this place is a little bit more hopping, and that's partly because, the business model that we have is we do have a lot of traffic coming in and out, and so it really does change the dynamic of the business.
To be honest, it is notable. The firm, I've always been, I grew up in Southern California, so I've always kind of been a fan of the history of Hollywood, which is wrapped up in a lot of things in California, not dissimilar from technology, technology's evolution. But this firm is famously, not modeled on, but thought a little bit about how CAA, one of the most important and powerful connecting mechanisms and agencies in Hollywood, built that.
Yeah.
And that was maybe motivation or inspiration, I guess I should say.
Yeah, it really was. So Michael Lofitz had been on our board at Opsware, which is certainly how I got to know him. And I think Mark and Ben might have had, even a pre-existing relationship. And the story he told us was when they started CAA in 75, they were really thinking about this idea of it had been a very kind of agent-driven model, right? Where essentially, you hire me as your agent and I represent you across all different domains. And the innovation that CAA had was kind of this idea that there ought to be specialists and experts across different areas. So in other words, we ought to have somebody who just focuses on international TV, and somebody who focuses on movies, and somebody who focuses on books. And the agent really becomes the quarterback for those, but doesn't need to be a domain expert in every areas. And that's kind of the model we've tried to apply to venture capital is we still have our version of agents, right, which are general partners, but instead of them having to be an expert in everything from sales and marketing to executive recruitment to PR and marketing, we've hired professionals who basically can kind of bring that expertise to the full portfolio.
Right. And why do you think it is in Silicon Valley, there a lot of firms, 150 people, a lot of firms have they have a person, a recruiting partner. I don't think anybody has come that I can think of has come close to that scale of doing it. It's kind of unique to have something that's working but not get copied by 20 organizations. Why? Is it just too hard? Is it too expensive? Is it?
I was going to say, I think there's two reasons. One is a money issue, just to be honest, right? Which is, look, it's expensive to obviously invest in that. And the problem is if you haven't from the day one built that into your operating model, then it feels like you're taking money out of one pocket, obviously, to try to build something which, may or may not ultimately have value for you as a firm. I think the other thing, though, and I think, we were lucky to see this at the beginning, you have to build it in culturally, right? So a lot of the venture firms, they kind of look like professional services firms, which means you kind of have almost each general partner is his or her own kind of vertically integrated firm in some respects. And of course, we come together on Mondays and we have the same business cards. But what we did from the beginning here, and it's quite frankly the reason why even my job exists, is we decided, look, you need to run this more like a company, right? You need to have managers, you need to have objectives, you need to kind of think about collective kind of objectives across the organization and really run it, quite frankly, more like an operating business than a venture firm. And so I think that's a harder cultural shift if you've been successfully running a venture capital firm in the professional services model for 30, 40 years.
And it kind of makes sense that it's in your DNA to run something. Like if you've come from just being an investment professional your whole career, maybe you think that just stapling on a recruiter
That's right.
makes sense, although it's just a market. You can go buy a recruiter in the market. Like if you're a company with $5 million in the bank, you can buy a recruiter. You can't really build a 150-person support organization.
I think that's right. And the whole theory behind the firm was, can we build networks? Can we build relationships and then bring those to bear to help our portfolio companies? And that's also a little bit different motion than kind of a transactional motion of, hey, let's just help you place the next CFO in your company.
And as you evolved from like 3 people to 150, which is a huge evolution, did you ever imagine that there would be this much capital, this much transformation in the world? If you look at something like Lyft, literally talking about, I talked to somebody yesterday who's like, I don't think my kids or my kids' kids are going to drive a car.
Yeah.
I grew up in Southern California. That's insane, but okay. Like, did you ever expect this?
we're optimists by nature. I don't think we ever could have anticipated the scale of what some of these companies have done. Remember, we started the firm in 2009. In fact, we started really planning for it in 2008, which, you'll remember, of course, was the, kind of beginning of the global financial crisis. Right. And so at the time, I think, the idea of having, our first fund was a $300 million fund, just having kind of that amount of capital to be able to go after what at least a lot of people thought was a pretty depressed opportunity at the time. That was unusual in and of itself. But the idea now that we're sitting here 10 years later with the amount of scale that we've seen across the industry, I don't think we could have seen that.
I think maybe the enormity of the opportunity has kind of shifted a little bit. When I was, we were at Friendster, one of the early social networks. John Doerr, our board member, said, this could be $1 billion company, and it was sort of this kind of wow, provocateur kind of thing to say. It turns out that Facebook is a $400 billion company.
Probably 500 now.
Yeah, right, exactly. So it's just sort of astonishing what has happened. Do you think that the culture, given, money distorts things, do you think the culture of Silicon Valley, given the outcomes, has changed the types of people, the attitudes in Silicon Valley at all in the time you've been here?
I don't think so. I think there's always probably, a segment of the population where the, money does potentially transform how they think about it. But if you really think about the heart of what people here do is, you've been in this valley for a long time, but it's really about kind of people thinking creatively about, can I become that next Facebook and what it can do? And yes, financial success, of course, if you do that, you'll achieve financial success along with that. But building companies is hard, and we all apply this narrative fallacy when we look back, and everything looks like it went up and to the right, of course. But to go through, that type of grind for 7, 8, 10, 12 years, there's probably, quite frankly, better ways to make money if that's your primary objective.
Yeah, it's pretty astonishing just to see the transformation of what happens in the world. And the crazy thing is, I've been to kind of other entrepreneurial centers around the world, and you meet people, and they're sort of like they've got some problem, and they're going to solve it. But in Silicon Valley, I'll sit across from somebody, and they're like, I'm going to make a I don't know, a quantum computer and it's going to create free energy. And you don't just out of hand think you're a nut. You're like, well, probably not, but maybe. Like, I don't know.
I think that's real. I think that's this business is a little bit of, you have to kind of willingly suspend disbelief sometimes, right? Because, if these were obvious ideas, of course, there wouldn't be the opportunity from a broader economics perspective for people to be able to build these companies. So I agree. I think you have to be, one of my partners, Chris Dixon, always says we're in the business of investing in good companies that look like bad companies is kind of how he describes it.
Yeah.
You've got the good companies that are good, which are too obvious. And so there's no economic rents to be achieved. And then of course there are bad things that are in fact bad.
Right.
And so it is an anomaly based business. And that really, I think, makes this world work.
When you first see a company, Andreessen Horowitz in particular, what stage are they at? Is it some guy going, hey guys, I have an idea, or is it a cranking along thing and you need to push Sequoia out of the way to make sure your capital's in? Like, where are you seeing, where's the company when you see it?
Yeah, so we do kind of both. So we'll do seed or kind of Series A, so first institutional rounds, and then particularly now with this new fund that we just raised, we will also do things where the business is working. And so I think of it in kind of two phases, which is there's kind of the early stage, which is what if this business worked is kind of the analysis, right? So can you imagine what this could be? And you're right, at that stage, it may often be a small founding team who has an idea that they've encapsulated in a PowerPoint, but they haven't, in many cases, started building a product. And then, the later stage to me is kind of the question of, is this business working? That's really the question, right? So hopefully at that point in time, you don't have product market risk anymore. The question is, can the company scale and operate and grow this from a $10 or $20 million business to a $100 or billion dollar business?
Yeah, it's kind of astounding to see it. There's a story of Frank Zappa. Have you ever heard his story of the young music manager and the old music manager?
I don't think I have now.
So Frank Zappa is the young music manager. You play. He has very eclectic style music.
Sure.
You play a song for the young music manager. They go, oh, I know what the kids want. This isn't it. You play for the old guy. He's like, I don't know. I've seen the craziest things work. I don't know if this is it, but it could be.
Exactly right.
So when somebody comes in and says, oh, people are going to be hopping into strangers' cars or strangers' bedrooms and, whatever it is, probably not, but it could be. And then these are multi-billion-dollar things.
I think that's right. And I think it really goes to the heart of this business, which is essentially you can almost think about what venture capitalists are doing is they're buying options, right? They're investing in option value, right? And if you're a finance person, you know how options work, right? Time and volatility, right, are the two variables that make an option valuable, and that's really what this business is. We're buying very long dated options, so we might be in these companies for 7, 8, 10, 12 years, and there will absolutely be volatility. But those are the things that actually make that option potentially worth something at some point in time, or many of those options will expire, worth nothing.
I mean, it seems that the thing that's changed in the last maybe 10 years is that the standard of deviation has changed.
I think that's right.
Where the upside is not a $300 million exit. I heard somebody said something yesterday, like he had a small exit. It only sold for $300 million. Like, what a world we're living in.
That's amazing, yeah.
That we're living in. I mean, has that changed? Are there now, the Chinese companies coming in, or different types of capitalists who never would have thought that this was big enough for them are now coming in and saying, hey, I want a piece of what you're doing?
Yeah,
maybe.
I think that's right. I think that's the biggest change over the last 15 years is the market size. If you win, the market size potential for these companies is bigger. And you're right. It does mean also it's harder for companies now too, because there's this interesting dichotomy in venture, which is it's cheaper than ever to start a company for all the reasons we know. And that's why we see all the seed capital, but it's probably more expensive than ever to actually scale these businesses. And you've got to prosecute that business across multiple geographies at the same time, because there will be local competitors in every geography, if you seed those markets. So it's just dramatically changed, I think, the business but quite frankly, along with it, the opportunity set.
Do you see a change? Now, Facebook, Twitter, Google, these large companies employ lots of people now, lots of engineers, and they pay them a lot. Do you see a trend of people not started? So if you're working at like a corporate job, you're Wells Fargo, you're in tech, you're like, I have an idea, I want to go do it. Right. You start a company. But now thousands of people are at Facebook making millions of dollars in time frames, 5 years, 10 years, pretty predictably. Has that changed who's coming into entrepreneurship in any way?
I think I don't think it's changed it. I do think it means that as you get bigger, so as you become, a Pinterest or Airbnb or some of these larger companies, I do think it means you increasingly have a tough employee recruitment problem against the Googles and Facebooks and Apples, because the person who's probably interviewing, at Google or Facebook is probably not looking at comparing that to other very early stage opportunities, but they're probably comparing that to more later stage opportunities. Right. And the biggest change that's happened in compensation, as you probably know, is the presence of RSUs, right? These restricted stock units for public companies. And this is, by the way, I think why you will see companies go public, even though they're going public at a later stage, that I think this issue of making sure they can stay competitive as they go from 5,000 to 10,000 to 15 or 20,000 employees, they have to be able to compete against that kind of liquid stock currency that the public companies have, which I think is what will fuel these companies ultimately to go public.
Right. And on your path down, down the years of it, it's about 10 years for Andreessen Horowitz.
Yeah, 10 years this June.
How did it come to be that biotech and cryptocurrency came into your purview? Were they just things that could change the world, so you had to be in them, or what's the?
Yeah. So if you if you go back to our very beginning, the single investment thesis we've always had, and Mark Andreessen articulated this in a Wall Street Journal article many years ago, was this idea of software is eating the world, right? And what that means for us is we view software as a very broad horizontal technology, and we should have our minds open to allow entrepreneurs to take us into different vertical areas. And then we got to figure out, does the application of software to that vertical area make sense? And so bio and crypto really came about in the same way, which is, we just started to see more and more interesting entrepreneurs doing things at that intersection of software and computer science and life sciences, for example, and then obviously crypto. And, we had kind of ideas about where that could go, but kind of that critical mass of talent is really what drove us there. And, we say sometimes internally, I think it's true that we're really in the talent business is what we're doing here, which is what are the most interesting on engineers, spending their time doing. And sometimes that critical mass really does create a market, and that's what we're trying to follow.
It's interesting on the bio side. I've met more people recently who are doing things like the food, substitutes.
Right.
And
in fact, there was an IPO that you may have seen today. I think Impossible Foods, or one of them went public today. Yeah.
And it's so interesting to me because sort of when social networks came along, it didn't exist, and you could talk about it all day long. But the first time it touched you, you went, "Oh, this is going to be a thing." And I never, I've always known vegetarians and vegans and all that. But now you've got this thing that basically tastes exactly like a burger, could transform how we produce meat, and Burger King has it on their menu.
Yeah.
And you're like, wow, those people are, in the coffee shops of San Francisco they're changing the world a little bit on the bio side as well as the software side.
I think that's right. Look, we continue to believe, and I think we'll see it, is that, look, technology is going to touch every facet of our lives, whether in our, professional lifetimes or certainly in our children's. And I think this is a great example of it where, you might not have conceived that it would make sense or there'd be a market for something like that. But, times change, consumer tastes change, and I think technology adopts along with that.
It feels like it's coming quickly. Like I didn't think like driverless cars would be around very quickly. And then, somebody was saying to me, well, there's a bunch of senior citizens who are leading the political charge because they stopped driving because they kind of get too, but now they can be completely mobile again. And that's a very powerful voting group. And you start seeing the dominoes, you go, wow, this could happen in not that many years.
I think that's right. Particularly, I think you will see, you'll see cities or you'll see kind of sub-corridors, right, where, people will actually probably want to facilitate driverless cars in order to do stuff like that, right? So it makes a lot of sense, and I think you're right. The question in some cases will be, regulation needs to catch up with the technology, and there needs, still needs to be other things to happen. But if you took all the human-based drivers off the streets, you could probably do autonomous driving in the next year or so. I mean, I think the challenge obviously is these kind of mixed environments, where you have to deal with autonomy alongside, human-based errors.
Do you guys? And I'll get to the book you've written, but do you guys think about? I've had a lot of people, very successful venture capitalists, talk about kind of the impact of they're having on society, not so much the Facebook political things, but the impact on income and income inequality. So if you have one example was driverless trucks. Truck driving is one of the highest paid non-college educated jobs in almost every state in the union.
I think it's the largest employer, I think, in the U.S. or something. It's amazing.
And then you kind of look at it, you go, well, obviously technology is probably going to start drone trucks make some sense. Yeah. Do you think about that, or is that just something?
No, we do, and it's interesting. Of course, if you look at history, right, it's always been that these technology revolutions have, in general, kind of always raised the economic bar for society as a whole. But I think you alluded to it. I think the difference now is they're happening over such short time periods that there is, unfortunately, kind of economic dislocation that we have to be mindful of. So. Yeah, we talk about it all the time. We spend some time in places like D.C. to help hopefully kind of, educate them about kind of what the pace of change is in technology and, how it's going to impact things of that sort.
So you've written a book, Secrets of Sand Hill Road Venture Capital and How to Get It. I knew there was a secret. What is the secret?
There's many of them, right? That's the problem. That's why we had to write a whole book about it. But
What motivated you to write a book, and all the things you're doing, all the demands on your time? What made you say, hey, I need to carve out some time? And
yeah, the thing that really kind of made me do it finally was I've been in the tech industry for about 25 years now. So kind of first in an operating role, and then of course now in venture for the last 10 years. And there was just a set of questions that I kept getting on a recurring basis from entrepreneurs. How does this business work? How do I know, if this is the right partner? How do I pitch a firm? And then, what do I do once I've got a venture capitalist on my board? And I started initially writing some blog posts on it, and I just felt like there was enough to say that, to go ahead and make it into a book. So my hope is that what this does is, quite frankly, really demystify the business and allow, whether it's entrepreneurs or, quite frankly, anybody who cares about technology and the impact of technology on our global economy, right, to understand kind of how entrepreneurship works and, quite frankly, the role that venture capital plays in that ecosystem.
So I think and this is such a funny thing about finance, I think one of the lessons, as I understand from the book, is about storytelling.
Yes.
And one of the funny things about Silicon Valley, if you work on Wall Street, you don't really tell a story. Like, well, I'm trading the, Norwegian bond against the yen, and they invert.
Right.
I had Poe Bronson on the podcast last week. Poe is a chronicler, best-selling author of Silicon Valley. He's been hired by a venture capital firm, IndieBio, to help entrepreneurs tell their stories. So what is the importance of storytelling in this area of finance, venture capital?
Yeah, it's really important. And by the way, we use the word storytelling, and I always have to, kind of make sure people are clear. This is storytelling in its best sense, not kind of can I hoodwink you and tell you a story in the negative connotation. But I think the way to think about it in its role in venture is, we want to invest in big markets, right? Because that's how this business works. And so you've got to assume that big markets are going to be incredibly competitive. And so the question then often is for venture capitalists, why do I want to invest in this team versus any other team that could come, by here with the same idea or the same business concept? And so what that means is if you're spending a lot of time evaluating team, and storytelling to me is a proxy for team, right? Which is, why am I going to quit my job, or why am I not going to take a job at Facebook or Google and go work for you when you've got nothing, right? You've got this great idea, but you haven't raised money, you don't have any customers, and they've got to be able to do the same to acquire customers. So much of the job of the founder and CEO is, how do I convince people, even beyond kind of their kind of level of belief, that we really have something, I have a compelling vision, such that people will follow that person in a way that, in some respects is maybe irrational for them to do so.
Right.
And that's why storytelling becomes so important, is you've got to be able to kind of provide a compelling vision that, kind of gives people something tangible to hold on to ahead of where the actual, financial results of the business are.
It kind of takes you back to the idea that, tied by California, the film industry and the venture capital industry are somewhat similar. I mean, the film, you have to tell a story to somebody. This actor is going to be perfect, and now is the time for this kind of a movie. Yep. It's kind of a similar concept, and probably a similar ethos that, these people didn't all end up in California by coincidence.
I think that's probably right. I think the economics of the two businesses are pretty similar too, which is, there are, we have these things called blockbuster movies, and our equivalent of blockbuster movie is a Facebook or a Twitter or something that really breaks out. And there's a lot of, unfortunately, movies that just never really have commercial appeal. And, unfortunately in this business too, that often happens.
Yeah. Now, when you pick a company in a space, okay, self-driving cars are going to be big, or shared rides are going to be big. I think one of the themes of the book is you pick one company, but you don't invest in the waterfront, which is, when Reid Hoffman famously invested in Facebook, he'd invested in, as an angel, the waterfront. He just thought social network, he started one, he invested in a bunch that are lost to history, except Facebook and LinkedIn are not. Yeah. But you pick one.
Yeah, I think that's a big difference between being an angel and then being part of an established firm, right? So the challenge is, you have to be mindful of conflicts, right? Because essentially when we invest in a company, our two brands are interlinked at that point in time, right? Whether for good or for bad, right? At that point in time, kind of, we've lent our brand to the company and we get the benefit, obviously, of their brand. And so for us to invest in something that is exactly in conflict, I think is very challenging to do. Now, as you can imagine, kind of the definition of conflict is often in the eye of the beholder. And, you have companies that often pivot, and sometimes you have that circumstance where they may start off completely non-competitive, but they end up actually pivoting into one another, and you have to deal with those things. But in general, it's pretty hard to have affiliations with companies if they're really selling to the same buyer in an enterprise, or they're really marketing the same service and they are truly substitutes for one another. It can be pretty hard to do.
So along these lines, how did you come to be the guys who invested in Lyft and not Sidecar? Or, which, by the way, do you know that the Sidecar was a third one
Yes.
that existed?
Yeah.
This always surprised me because Sidecar, every woman I know loved Sidecar over the other ones.
Really?
Yeah, it was simple. You could choose a female driver. So this is early on, before there were all the safety and all the things. People were like, I'm getting some car with some person. And so 11 o'clock at night, they could choose a woman. But it's just odd that there wasn't room for a third one. It seems like there's two, and you're in one of them. So.
Yeah, we were lucky enough to meet John and Logan. It was actually the kind of second round of financing they were doing, and we'd been studying the space. And part of what our job is we use this term internally called prepared mind, right? Which is, look, we ought to have ideas and theses about industries. We want to be careful that we don't allow those to kind of be too close-minded in the sense that we still need to be reactive to things that come in the door. But we had been studying the space for a while, and really, it really goes back to this concept of team. The company at the time, there were some metrics you could look at, right? So there were some markets that were up and running, San Francisco, and you could get a sense of whether it was working or not, at least in a small case. But we just found kind of the two of them, kind of their vision. If you remember, they had come originally from the original company, had a different name.
Yeah, Zimride.
Zimride, exactly right. And they were really kind of, before ride sharing was really a thing, they were the ones who really started this. And we felt like that was the concept that really could have legs. And, over many years, obviously, it's been a fantastic opportunity. And, now as a public company, we certainly will kind of, continue to cheer them on.
It's another lesson that I think I take away is that the difference between the big hit and the small hit can be so subtle, where there were companies around, everyone saw the same thing, that there were 96% of cars weren't used 96% of the time.
Right.
So people should share cars. And it turns out that wasn't quite the answer. It was close. The answer was they need rides, not cars.
Right.
They didn't want to get their neighbor's key or whatever. They wanted to come home 10 o'clock at night after a couple drinks and have someone else drive them.
Yeah. I think that's right. And this is why, to go back to the earlier topic we were talking about, this is why team is so important in our evaluation, right? Because we know that the product is going to morph over time, right? We all use this euphemism called pivot in this business, right? Which is a very polite way of saying what you thought was the right product or service is not the right one. You got to go figure something else out. And that's why the team is so important, because we're more interested in kind of their thought process, and do we believe they'll be responsive to what the market tells them when they actually get out there and be able to kind of pivot appropriately and find the right kind of product market fit. And so, that becomes so much of the evaluation, because we recognize that these businesses aren't static, and you have to be responsive to what's happening in the market.
Another theme of your book, meddling in the affairs of the founders.
Right.
Since you do have such a big operation that can help the founders, how do you keep from just driving them nuts and getting in their way and letting the? I guess I'm trying to figure the difference between an entrepreneur guiding them and saying, guys, this is a loser, versus you went to a conference and you're going to give them bad advice because you heard somebody talk yesterday.
Yeah, no, I talk about this a lot in the book, right? This whole idea of kind of, what does a good board member do? What does a bad board member do? And I think the real issue that we try to be extremely respectful and mindful of is, no matter how much time we spend with the entrepreneur, we really do not know what's happening in the inner workings of the company, right? And this, having been an operator yourself. I mean, if you're in the company, you know exactly what this engineering team is capable and who the stars are. And so for us to sit there and give you product advice around, when you should be delivering products makes no sense. The way we set up the firm was to try to kind of, encapsulate that as well, which is everything we offer in terms of help here is, number one, it's free, so we've never charged an entrepreneur for anything. And number two, it's all kind of, a pull model for them. So we don't kind of push and insert ourselves and say, this is the Andreessen Horowitz playbook. You either kind of, play by these rules or you're not a portfolio company. Everything we do is to say, look, it's here for you. And if we add value, then we can help accelerate your business in a way that makes sense. And obviously companies who utilize that have found that has, tremendous value to their business. But we have to be very mindful and very respectful to not kind of impact the entrepreneurial process by getting ourselves too embedded in the day-to-day business, and therefore, miss out on that delta.
So who should be benefiting from this book? Like, as it goes out into the world, who do you hope people all around the world actually listen to the podcast? So I guess people all around the world. But who should really benefit from it and make sure it's in their library?
Yeah. So I think I think it's really applicable to basically anyone who is interested in understanding kind of what's the role of technology in the broader economy. And so certainly, that means entrepreneurs, it means people who are in the startup ecosystem, but I think it also means anyone who wants to understand, again, the role that venture capital plays in facilitating technology, facilitating economic growth. And, as you know, today, that the world is incredibly flat in that respect, and there's lots of opportunity, outside the U.S. and lots of other places. And so I hope it finds traction there as well.
Well, this is exciting. How do people get in touch with you, I shouldn't say, but follow your thinkings and the thinking of Andreessen Horowitz? Is Twitter the right way to do it, or what do you?
Twitter is great. So you can follow me at Kupor on Twitter. We do a lot of blog posts on the website at a16z.com. And so those are all good places to find us.
This is great. Well, thanks for doing this.
Well, I appreciate your time.
All right. My guest has been Scott Kupor of Andreessen Horowitz. This is Something Venture Podcast. See you next time. Thanks.